Hello everybody and welcome to the midweek market update from Smack the Markets for the 3rd of September. So this week has certainly been quite an interesting week in the markets. We've had a lot of strength in the US dollar as that's been trying to recover after its strong sell-off over the past few months. Importantly, that market is above the key 92.50 level at the moment. It doesn't really change the overall trajectory of that market, which is still to the short side, but the relief rally that we're seeing at the moment and the strength in the US dollar is certainly having a help on the precious metal fronts, bringing those markets back into fair value areas. Stock markets and stock indices are having a bull run at the moment. The Dow almost sort of reaching its all-time highs again, so joining almost that new high club with the S&Ps and the Nasdaq. So let's take a look at a few markets here and take a look at what's sort of going on. If we have a look first of all at the Dow here, we can see that the market's had a very good run, almost getting up to its all-time highs. It's only a sort of a shave away from there, and I wouldn't be at all surprised if it reaches there before the end of the week. I think at the moment here we're coming into a period of time where typically and traditionally it's a good time of year for stock indices and these stock markets. So I wouldn't be at all surprised if we see continued strength coming into these markets, and certainly the momentum being on the more bullish side as we run up towards the end of the year, particularly around we've got things like vaccine development, easing of lockdowns, which may well come with a vaccine to the market, and that sort of news flow is only going to help stock markets to push to new highs. Having said that, after going forward after that, these markets are looking extremely extended, and they have had an extremely good run, and there's many commentators and analysts suggesting that the valuations of these markets are looking rather questionable considering the state of the world's economies at the moment. So with that in mind, we're just looking at intraday trading opportunities on these markets at the moment. So looking at trades during the day session and clearing out overnight so that we're not exposed to any sort of overnight risk of gaps and return on volatility. If we take a look at the precious metals here, you can see that precious metals have softened off. Again, this is on mainly on the change in risk sentiment. So we've got very much a risk-on approach at the moment in the markets. So there's not much appetite for risk havens at the moment, and gold and silver are coming off quite sort of strongly. Having said that, there are plenty of things coming to the table which could upset the balance, and these markets are very sort of changeable at the moment. So bear in mind that later on today we've got the US initial jobless claims numbers, and later on Friday we've got the non-farm payroll numbers, which are going to be very closely scrutinized by traders this time round and going forward due to the new stance on employment from the Fed. So if we take a look at silver here, you can see that we've now got a short trend forming here on the mid time frames, with the next sort of structure level around this sort of 1920 price point. I think if the market sort of takes out 1920, then we're looking down towards these old lows, and the test here back in August, when the market sort of hit this low around 1875. Below that we then get down to that sort of 1850 area, and as I've mentioned before, these sort of levels could be areas where the market may well sort of come back to before we start to take some of the excess out of these markets. If you take a look at this on the higher time frames, you can see the perspective here. Move back into 1800, 1850 is fairly sort of reasonable on these higher time frames. It doesn't change the longer term trajectory of these markets, though. I do think that gold and silver will continue to be higher prices going into next year and beyond. If we have a look at silver, silver is a little bit more bullish than gold, and you can see that whilst the market has sort of come off, it's coming back into technical levels where it's finding support. At the moment, we've got the 27 sort of 180, 190 area here where the market's finding key support. Below that, we've got that key 26,000 area, or $26 area, I should say. So again, some very clear sort of decision point areas. We're keeping close eyes on these markets for intraday plays in these trading windows, and then looking at longer term positioning once these markets sort of get back to very key decision point areas. If we take a look now at some of the currency markets, now on Tuesday it was this week, because we had the holiday on Monday, we were looking at dollar Sing. Dollar Sing to the short side. Now this market has taken out, come down to sort of lows. Now these, obviously the strength in the US dollar now has meant that these markets have broken up and started to push to the high side. We're still within the context of short trends on these higher time frames, so there's no change in the direction of trend, but with the strength in the US dollar has meant that we've now had an uptick in these markets. Some that we're looking at though are markets like the cable here. You can see that all of these dollar markets with the strength in the dollar has pulled these back. Cable, for example, we've got a rather interesting area around that 132 to 132.5 price point. So this is the daily time frame. You can see that we've got a nice strong level through here. So possibly pulling back into here takes the heat out of that recent move. Come down to the 4-hour time frame, you can see around 132.5, clusters with these previous highs. It's also a fib zone as well, so there's quite a bit going on in these areas if the market sort of comes back into there. Otherwise, I think keeping an eye on some of these yens could be interesting. So markets like Great British Pound against the yen back into the 140 level, 141. You can see this here on the 4-hour time frame, and also there on the daily time frame. It's quite coming back into quite a significant sort of price point. So again, we'll be keeping an eye on those areas just to see if there's support, enough support for the long trend to continue. So there's a few markets there that we're keeping a close eye on in the trading room going into the sort of second half of the week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.